Well, let's check back in on the markets. As I mentioned, NASDAQ just briefly went negative. It's barely in the positive territory right now. We started out with strong gains. It's coming back down. Gregg Smith joins us now. Greg, even when you start out with a bang like we did today, investors are very skittish.
Good morning, David. Yes, they are. Look, as the battle lines are drawn and the world is sitting here watching a David meets Goliath battle getting ready to take place, this time probably without the biblical or profound ending. And in this case, David's 5 stones, if you recall the story, are not going to be much of a match for Putin. But I think U.S. equity investors are probably way more focused on what's happening there and should be more focused on rates and inflation story back home.
But they're connected. They're connected because of the fact that as we know that the Fed has political instincts as well. And we've seen that in the past, no matter how much they claim that they're non-political, they do. And with the price increases, the greater price increases we may get because of the war in Europe, there's going to be a lot of pressure on the Fed not to increase rates so quickly.
Look, I think equity investors here in the U.S. are a little behind the bond market. I think the bond market is actually pretty rational. And if you look at what the bond market is telling us, yes, we're seeing 7 rate hikes priced in for the next year. But if you look out at the forward rate, bonds look like they'll be trading at 220 a year from now. So the yield curve looks like it's going to be flat for the time being. It doesn't begin to invert for a few years out. And I think that's telling us that the bond market believes that inflation will begin to come under control. I think, in my opinion, it's going to take the equity market and equity investors several more months, probably until April, to believe that inflation will come under control. So I believe that we'll continue to have choppiness, volatility in the market. I think you hold on to your high quality stocks. Yeah. It's not quite time to buy small cap, high quality small cap growth yet. And I think the next few months will play out and equity investors will get comfortable that inflation will come.
Well, Greg, let me just put it to you. The way that Volcker back in the early 80s got control of inflation was by putting interest rates above inflation. We are so far away from that happening here. And with a lot of people say we're already in double-digit inflation. That's what Kevin Hassett and others are saying right now. I just don't see any getting control of inflation if you keep inflation way up above where interest rates are.
Well, let's keep in mind the Fed has a lot of arrows in their quiver. One of the biggest arrows they have is their words. They haven't even acted yet, but in my opinion, Act 1 of the great unwind here has already taken place. Look what's happened to all the high beta, the high spec stocks, the SPAC stocks, the ARK stocks. Over the last 6 to 12 months, many of them have declined by 50 to 70%. And again, the Fed hasn't even acted. So that downdraft has actually sucked a lot of liquidity out of the market. So I think that the Fed can continue to speak, and the equity investors should continue to take cues from the bond market, which again I think is pretty rational right now.
And you always have your lunch boxes behind you. You can always rely on that. Forget gold. Lunch boxes is the key to survival.
Well, if you find an old sandwich in them, I will be very worried. So,
Greg, good to see you. Thank you so much for being here. Appreciate it.